This week's market update, we're going to highlight a few key numbers here. Whoops, went too far there. We're going to highlight some numbers. Just got to move something on the screen. There we go. So one thing, a couple of numbers we want you guys to zoom in on is the number one line there, total sales. And you can see that this year, for the first half of June, is the total sales are beating June of last year.
Mm-hmm.
Now, what happened last year is the market really started to boom after we came out of COVID. And then when the interest rate started to go up and up and up and up at the beginning of this year, sales started to drop off quite a bit. What we're seeing now is those sales are coming back. And we're actually month over month beating the months of last year.
Yeah, so what's happening, which is kind of cool for us right now, is that there's more properties coming on the market, but guess what? They're all being sold. So all of the ones that are priced correctly, they're on the market within less than a week and they're gone. So it's a bit tough for us still. Properties are going into multiple offers, or we're listing properties and they're selling immediately. So you have to be quick, and that's why it takes this education to understand what's happening in the market, understand what types of properties are out there, and what price you should be paying. Some of these properties are going $20,000, $30,000, $40,000 over list price, and we get this question all the time: where do you think the market's heading? We still believe, Tim, what's the average at this?
The average, you can see it down here on this, is for the month of June anyways, it's 556, almost 557. So compared to last year where the average price was 522, we're up $40,000.
Yeah, so about 3 years ago, 4 years ago, people were asking us, where should the average be in Calgary? We believe it should be around 650,000. So we believe the market will continue to just slowly get there, and that's where it will level off. So what does that look like for us? It looks like more people moving here. We can definitely tell you from just ourselves buying properties for clients that they are moving here from Ontario, they are moving here from BC, and they are moving here from other countries as well too.
Yeah, and what we're seeing is the people that are getting into the market right now, if they're in a certain price range that's a little bit lower, say 350 to 450, the ones that get in now, and that's what they can qualify for, we think that in a year and a half, 2 years, they won't be able to qualify for the same house anymore, because those houses that are in that price range, we think that they're going to move up in value. And if you can only qualify for that amount, you're going to have to go down in your housing choice. So you'll have to move into a townhouse or a condo.
Yeah.
And what we're seeing is younger people who are just starting out, they're actually starting out in those lower priced housing choices, not necessarily a single family home, which they might have done, 5-10 years ago.
Yeah, just speaking to the numbers here, we're still low on active listings. You can see it shows 3,444. Last year we had 5,552. Last year's market was totally different. Tim, we would take out a client and we would show them 3 properties and we would pick one. Right now, we only go out and show 1 property and we have to race to go see it. So that's what the difference is. Will the listings come on? The problem is that people aren't selling because there's nowhere to buy. They can't put their house on the market because they don't know where they're going to buy. So it's a very tricky situation we're in. And markets, Tim, they never last forever, right? So
yeah, so this market we're in, where it's such a tight supply, that will loosen up because it's unsustainable over the long run. So eventually we're going to have more supply come on and more choice for buyers.
Yeah, we don't feel that the prices are going to come down for some time.
Yeah, so that average price, expect that to rise over the next couple of years. And like we said, if you're getting into the market now, you're going to participate in that rise in prices. And history has shown that that's what happens. All of our clients that bought last year and the year before, they've all made about $100,000 on each one of their purchases.
Yeah, that was the idea between it all, and good for them because now they can refinance that money out and go buy another property.
Yeah. So next, we're going to go to Danielle DeMarco. Danielle is our go-to mortgage broker. She's a real estate investment mortgage broker. So what do we mean by that? She actually puts you on a real estate investment plan so that you can acquire as many or as few rental properties as you want to. We'll bring Danielle on right now. There she is right there. Hey, Danielle.
Hello. Hi, thank you. Okay, so today, obviously I wanted to kind of quickly touch base. I had a lot of inquiries the last week here. The Bank of Canada overnight lending rate increased, therefore variable rates, prime lending rates increased. We kind of went back and looked at some historical data because obviously for anybody that's in a variable rate, it's a little bit concerning how much the rates have increased and payments have increased over the last year or so. But when we went back and we looked at 2007, where the rate went up to 6.25%, we're obviously higher than that, but still giving some context. Within 18 months of that, we saw the rates come back to 3.25%. So we saw a 3% drop in rates within 18 months of that increase back in 07. So if history repeats itself, which it tends to typically do, we are still hoping that rates are going to be coming down again within the next, 18 months here. No guarantee on what they're going to come down to or by how much, but just we're hoping that they are continuing, going to come down. We did see fixed rates increase steadily over the last 3 weeks here. That's because bond yields have been up. So bond yields affect fixed rates. The overnight lending rate affects the prime rate and the variable rate. So as bond yields increase, fixed rates go up. So a few weeks ago, we had as low as 4.39% on a mortgage, and now we're kind of, 4.94, 5.09 and higher. And I'm talking high ratio here. So we did see a 0.5% minimum increase on rates these last few weeks. Now, having said that, does that mean that we don't want to be purchasing? Absolutely not. You heard what Tim and Azad just said. While we may see more inventory in a while, time will say that, the lack of supply can't sustain itself, but we're not expecting house prices to come down. So for anybody that's waiting, it's tough because if those house prices continue to increase, we're going to see what happened last year, where we saw home buyers who could purchase the year before for 500,000 and then all of a sudden only purchase for 400,000. And same thing, we're going to see something that gets you 500,000 now, next year might not get you what you're wanting. You might be looking at a lesser property in that same price range just due to house prices likely not coming down. So that's just the quick market update. As far as topics of conversation, I wanted to touch base on purchase plus improvements in light of what Tim and Azad are talking about today. So when we're talking about legal basement suites, obviously a lot of the properties that you guys will be looking at are going to have illegal suites to start with, maybe a mother-in-law suites, maybe not suited, but have the potential to suite. So a purchase plus improvements mortgage is where we can add on improvements into the mortgage itself to help cover those costs. So let's say it costs you $20,000 to develop a specific basement and to legalize it and get it where it needs to be. Well, we can add that $20,000 into the mortgage. You come up with the funds up front to complete construction, hire the contractor, but then once the work is complete, you're going to get that $20,000 back. So it's a great way to leverage the bank's money to get the improvements done. So you're not out of pocket at the end of the day. The benefit to you, obviously you're not out of pocket that money, but secondly is that when we put $20,000 amortized over, a 25-year or 30-year mortgage, we're really not affecting your mortgage payment by much at all. Other benefit is that rental income. And this is what Tim and Azad are going to touch on today. You can drastically increase the amount of rents you can demand from a property if you have a legalized suite. So investing that $20,000, adding it to your mortgage, affecting your mortgage payment by a very, very little bit, but getting that extra rental income and a higher positive cash flow. So this purchase plus improvements program, there are different requirements depending on the lenders. So definitely reach out if you want more information about it, but it is a fabulous way to develop those basement suites without necessarily having to have cash on hand to do it. And again, reach out if you have any questions about that, but there's lots of ways that we can set that up. Depending on lenders, will determine how much of a purchase plus improvements loan you can get. And depending on rate will obviously determine what that affects your payments by. But it is a fabulous program to use to help get those rental suites developed. And one other thing with regards to legal suites is when we're coming up with investment plans and we're talking about multiple properties, if you want to purchase 3, 4, 5 properties, the most beneficial way to qualify for additional properties down the road is to have a legalized suite, because then we can use a higher rental income in your mortgage application to help offset the debts attached to that property. So when we're qualifying for a mortgage, they're looking at any properties you already own. Let's say you own a rental and there's property taxes, a standard heat calculation, and a mortgage payment, and maybe a whole house rental of, let's say, $2,200. Well, now you legalize that suite. So now when we're looking at the mortgage or qualifying for another property, we're looking at the property taxes, the standard heat, the mortgage payment, but now your rental income instead of 2,200 could be 3,000. So you can see how having that extra rent is going to help you qualify in a mortgage application for additional properties and accumulating that investment portfolio. So lots of benefits behind legalizing the suite for sure. Tim and Azad, I think that's it. I'll put my information in the chat though if anybody wants more info about that program.
Awesome. Thanks,
Danielle. That's awesome. Yeah, Mortgage Plus Improvements is the way to go for people out there. Am I muted or am I on?
No, we should be on.
Good. Yeah, so Mortgage Plus Improvements, we love that. We do it all the time. It is a little tricky where we got to take a contractor in there, but we actually know the numbers when we go into a property, Tim. We know exactly how much windows will cost to enlarge. We know how much to drywall either a furnace room or redo the ceiling in a basement suite. So these are some of the things we will be talking about tonight. And Tim, it can get costly, especially if the kitchen's not there in the first place. So we will give you guys the rundown on what to buy, what not to buy.